with that. And I'm at Cloud9 Hills Resort at my place in Lonavala. So I'm traveled back here, and there is some network connectivity issue. That's why it's getting disconnected in between. So just bear with me, and let me just check. Yes. So the live is also working well. Perfect. So let us very quickly start. I mean, Nifty has continued to move higher. We can see price have been moving beyond 13,500, but yes, the volatility has increased over the past few days. Before we move on, let me take on the popular polling that we keep doing every now and then, and the polling is in front of you, which is what is the Nifty trend? What do you expect is the Nifty trend going to be in the coming week? Please participate in the polling. If you are watching me on YouTube, you can't really do that. For that, you have to be on the Zoom platform where we are conducting this live webinar. So what do you think is the Nifty going to close by the coming week? Are you able to get that polling answer? I'm not sure. Something is wrong if you're not getting that polling also. But if you are getting it, so please participate. Yes, I can now see the polling is going on. And you have to pardon me if you see any kind of movement in the background. I am there with my kids, so there might be some kind of disturbances which might happen. And very interestingly, last week when we did the polling, a lot of you mentioned that the have been bullish, and then it has continued to go on the upside even in this week. Yes, and market continues to be in a very expensive terrain. I think the price to earning ratio has already crossed beyond around what 37 levels. So that continues to be there. Greed, liquidity has been driving the markets. Last Friday's webinar, if you are following me on YouTube at the rate Kyal Ashish, you know last Friday we talked about how greed is driving the market on the upside and liquidity, and why it is comparable to 1992 that we saw. And one of my mentees actually pointed out that the Nikkei price to earning ratio touched 42 way back. I'm ending the poll, by the way. Price to earning ratio touched 42 way back in 1979, 1980s. And since then, for 40 years, Nikkei has been in a downtrend. I'm not saying we are going to be doing that, but definitely we are in a risky environment. Try to understand that is from a bigger time frame perspective I'm talking about. But short term, yes, the trend is up, and it has been going up and away. In this kind of a market environment, which sectors do we expect to outperform? Which stocks can outperform from here on? That selection becomes extremely important. Next, very importantly, tomorrow I'm going to conduct one more training, which is from 5 to 7. Later, I'll launch a poll if you would like to attend that training program, and then I can ask my team to register for you on that program module also. And we have a BMW, which is starting from next Saturday. So Master of Technical Analysis starts from next Saturday. In case you are interested, you can visit wavestrategy.com. I'm going to talk a bit about it later in the session. So here are the results right now. You can see it in front of you. Nifty trend. So we have 59% expecting the up move and 41% down. So nothing much on that front as of now. And let me stop the sharing the results for now. And let's just move on and try and look at what I want to share across in today's session. How the Nifty should be behaving in the coming week is what I want to share across. But before doing that, I would also like to understand, what do you think is Nifty headed for? Do you think is it headed for 15,000 level? If yes, what basis do you think it's going towards 15,000? Yes, because the reason I'm asking that is because a lot of people have been calling me and telling that Nifty is headed towards 15,000 levels, and for sure it is headed towards 15,000. I said, see, I'm the guy of a probability. I do things with probabilistic scenarios. So if you are 100% certain that Nifty is headed towards 15,000, well and good. I don't know, but for sure I am not 100% probabilistic guy. So that's what I am talking about. And let's make this session an interactive one, like we do always. So keep putting in the chat box your queries, your doubts. There is a Q&A section. I will take up the Q&As at the end of that. So so let's just see how it's going to behave. Which sectors can possibly perform from here on? What do we expect markets to do? Where do we stand right now? So let us just go on one very important chart that I wanted to share across, which I have shared with my mentees also in a very detailed fashion, but I'm going to share across with you all right now. Are you able to see my screen? Are you able to see the chart that I'm showing you right now? in front of the screen? Are you able to do that? Okay, so this chart that you are seeing in front of the screen is a very detailed chart, which is a relative outperforming chart, which is showing how each of the sectors are performing vis-a-vis compared to Nifty. And how is Nifty performing from that point of time? Are the sectors outperforming Nifty? Are the sectors underperforming Nifty? Is what you can clearly make out from this chart. Are you able to see my screen as of now? Okay, so that clearly showcase that we are seeing a very huge outperformance from the pharma space. Now, this is a very important chart which shares across uh, from the time that you consider it is showing an outperformance from that specific date and time. If I can ask you people on YouTube, are you able to see this chart with in front of you right now? Tell me with a big yes if you are seeing it as of now. Okay, perfect. I can see a yes coming in and you are with me. So over here, what we are trying to see, let's just break it down in a very simplistic fashion and let us try and understand that. From the lows, if we look at it, so this is the lows. Okay, I'm connecting I'm taking the lows. Always understand the starting point will be the lows from where the comparison is being done. If I look at the lows of March that was formed, from that space, if we are looking at it, the most underperforming sector had been Nifty PSU banks, followed by FMCG. Now that's very tricky, and and the most outperforming one is the Nifty metal, IT, auto, all of those has been and most outperforming. But I'm not going to look at things from the March lows. I'll tell you one why I'm not going to look at things from the March lows. Try to understand this. The sector that has been beaten down the most, maybe 60, 70, 80%, can be the sector which can possibly outperform, right? That does not mean it outperformed from the top of March, from the top of Feb. So that is very important you understand. The outperformance has happened from the top of Feb is the real outperformance that we want to measure, because the markets crashed. With the stocks that crashed the most can start showing a recovery. So for example, there have been certain stocks which went down by nearly 70%. Those stocks like IndusInd Bank will definitely show a sharp recovery, right? You always expect a pullback at times. So that's not a correct interpretation. Are you with me? Are you getting what I'm trying to say? So we want to see a performance on this chart, not from the lows, but we want to see the performance on this chart from the tops, from the top that was formed in the Jan and the Feb. That's what we are trying to look at. Now, if you look at the performance from the top, you can clearly see that pharma and IT had been a strong outperforming sector. From the top, pharma IT had been an outperforming sector because these sectors have recovered very sharply compared to March top or the Fab top. It has managed to still give 36 to 48% return. Now that's a very interesting aspect. And if you have been looking at this way back in 2008, these sectors outperformed even then. Way back in 1987, these sectors outperformed even then. Now the outperformance have already happened in these sectors. So I'm not saying that this cannot go on further, but my take is, as of now, the outperforming sectors in the future, outperforming does not mean it can't go down. Outperformance means that it will go up relatively outperforming compared to Nifty. What you can see is the candlestick chart is Nifty over here. You can clearly see that the auto and the FMCG sector has just trying to cross above Nifty performance over here at this point of time, and also metal. But metal, I'm not too sure. Metals have been always a tricky aspect to take care of, given that the metal sector has a lot of influences from the commodity prices, global outlook, and a lot of those things. What I'm looking is that FMCG is one such sector, followed by auto. You need to keep a watch on these two sectors. If you ask me whether we should buy PSU banks, I am not the guy who is going to bet on PSU banks for sure. If I want to bet on PSU bank, let PSU bank come up, cross above Nifty, and let it stand the test of time. That's the bottom line. Let it test time, and it should outperform Nifty. Unless that happens, I'm not betting on real estate. I'm not betting on PSU banks. I'm sure many of you are betting on Bank Nifty. I'm pretty sure about it, and I can see that from the comment. Yes, you might be betting on Bank Nifty, but I am not too big fan as of now. So for me, the sectors that remain for selecting stocks that can outperform are right from pharma, IT, auto, and FMCG. And auto can go in volatile fashion because it is trying to come out of a multi-year downtrend. At the same time, pharma can have 5 years, I think nearly 5 years of underperformance. Pharma can continue to outperform. So I am expecting that pharma can continue to outperform after coming out from the consolidation after 5 years. You will not believe, in 2017, I talked about Reliance, a very similar aspect. I talked about it, but people thought that Reliance can't outperform. And we published that in the multi-bagger research, and it gave exorbitant return way back from 2017. So now I think it can be the state where pharma, auto, and FMCG can outperform. Now, how to select stocks from these sectors also? From the FMCG space, from the auto space, there are many such stocks. You can see ITC, you can see HUL, you can see Nestle. There are so many of those. From the autos, you will have Maruti, you will have Tata Motors. Which one to select? And also, you have to understand the markets are definitely heated up, definitely overstretched. In this kind of a scenario, what do you bet on? So you need to understand, I'm not ignoring price to earning ratio. I'm still with my view that this is wave B, and once wave B complete, we will have C. Let's just see. It is too extended, too sharp, and that's an overall perspective I'm talking about. But short term, keep a very close watch on the levels. So we will go on the stocks. We'll go on the index now. Is it making sense which sectors are going to be outperforming? If you want to do a short term selection, you can simply zoom in the chart. You go to a short term selective selection chart and look at in the current up move what has been outperforming. So in the short run, banks have outperformed. So you, for the short term movement, you can bet on PSU banks on the short term moment. But from the investment perspective, I'm not betting on the PSU banks for sure, not on the real estate. I can be wrong. I don't care. But the risk is not warranting me to bet on those. Let PSU banks go 100% up from here. I'll probably bet more on the auto than the PSU banks. That's what I am looking at. This is my view. And then if you have any apprehensions, you can probably do your own homework before you bet on these kind of things. Okay, so that's the view. Let's just switch on now to the Nifty and try and figure out what's happening with Nifty. Let us see what is happening with Nifty. Where do we stand now? What are the patterns suggesting? Which pattern is possibly forming on Nifty? Where is the channel resistance coming in? And a lot of those things. So if I'm looking at the daily channel, Nifty has definitely continued to show a very sharp up move. So I'm not betting against the trend for now. I'm only going to connect the tops together, and I'm going to see if this top is also going to be sustaining. So for so far so good, it has managed to sustain above these levels, and it is breaking out as well. So that is what Nifty has been doing on basis of the channel. So we stand right now over here. We are at this phase. Let us connect another short-term channel and try and see where do we stand for now. Can we do that? So these are the bases of the channel that I'm connecting as of now. And if you connect the short-term channel, we stand from the tops here. We stand over here. We have managed to break above this channel. We are consolidating here. So if Nifty can now break with strong momentum, another 100, 150 points, the mania can continue on the upside. So do not try to catch a top. But if we reverse back down below the important support level, can you tell me where do you think is the important short-term support for Nifty, which is lying? By looking at this specific daily chart, where do you think is the short-term support on the Nifty as of now? Where is the short-term support lying as of now? Can someone tell me? 12,800 is the one level that someone talked about. 12,800. Okay, that's pretty well. Absolutely, that's one of a very important level that we are looking at. 13,350 to 13,400. Okay, 13,350 is this level. I'm not sure if this you can call it as a short-term support level. But for me, what is going to be important is going to be around this zone. So that's going to be important for me, which is 13,170, where the short-term moving average is lying. Now, which moving average to select? Is this the correct moving average? I'm not saying this is the correct one or this is the wrong one. You select the moving average basis of which ones are providing good support to the prices and which ones are providing resistance to the prices. So the Master of Technical Analysis program, which is starting on next Saturday, this is exactly what we want to do. We want to look at which moving average to select. We want to look at which candlestick patterns work and why they fail at times. You might have seen there are patterns like head triangles, double tops, double bottoms that fails most of the times, and most of the times they function very well. So which patterns work, which patterns fail, why do they fail, where do you apply Bollinger Bands, where do you apply trend following methods? That is what is extremely important. The current market trend following is going to work extremely well, but once Nifty breaks below the support of for me, the support is lying near 13,290 as the first level. 12,800 is definitely a very important support level. So once Nifty breaks below this level, my strategy will change back from trend following to catching reversals and trading the market. Are you with me? Are you understanding how do we change the method by basis of support level break or resistance level break? That's how we have to do it. That is very, very important. You have to understand that, extremely crucial, that from where the support level breaks, resistance level break, you have to change your method differently. Also from wave theory perspective, let us try and understand from wave theory perspective, where do we stand for now, where is the market, and why it has to possibly behave in the way we are expecting it to behave. So this was wave X. Do you remember we discussed about wave X? From here we had wave A, we had wave B. This is wave C, which is going on right now. And in this wave C, there is complex corrective pattern. I'm not going to get in much detail of that. You can get into my morning research report. But one thing is for sure, this pattern is also looking like a wedge to me. The pattern is looking like a wedge to me. And if this is a wedge pattern, we know what follows after a wedge pattern. Guys, tell me what happens after a wedge pattern formation is over. What do you expect to happen? I'm saying that if this is a wedge pattern, let the support break. You will not jump in shorting the market just because I'm telling you to the wedge pattern. Support should break. If the support does not break, nothing changes. You still use this market as buy on dips. So that's how you have to understand this market very, very clearly. If this is a wedge pattern, stay alert, stay tuned, do not be complacent, be aware about the levels that you're looking at. Do not hesitate to pull the trigger once the support breaks on the downside. But if the support does not break, you need to be very, very careful, and you need to keep riding and buying the dips of the market. So for now, the market trend is positive. If I have to trade for 1 or 2 days horizon, I will stay long. But if I have to wait for a week or 2 weeks, I'm not taking a stand there. I'm waiting for supports to break. Am I being very clear? So different time frame traders have to evaluate. So you have to jump from a positional trader to an intraday trader. When I say positional, from 5 days perspective, but you can take a bet from 2 days perspective on the long side. From a month perspective, definitely I'm not buying this market. So this is how you have to understand. If you are a 1 day or a 2 day trader, you can bet on the long side. If you are a 5 day, 6 day trader, stay out, stay put, wait for markets to decide. If you are a 1 month or a 2 month kind of an investor, definitely I'm not jumping in this market right now, because I'm not sure whether it has sufficient momentum to pick up from here. But stock specific trading activity can be adopted, stock specific investment can be adopted. That's what we give in the multi-bagger and the momentum research report. So that's what can be done right now. But yes, wait for the correct opportunity. You have to wait like a prey before you can jump in on the market. Okay, let's just move on. I'm going to take a few questions in the Q&A section. Just give me 1 second, please. Please advise time to sell Tata Steel because steel is commodity and has severe fluctuations, particularly Tata Steel carrying huge depth. Rajkumar. Stock specific advisory I'm not giving here, but you can get access in my daily morning research report, financial wave short term update, from where you can get the research. So you can do that. Okay, there is a question on more about the BMW program. Okay, so the BMW program that I'm talking about is the Master of Waves and the Master of Technical Analysis program that we are conducting in the coming week. It's starting in the coming week, so you can possibly keep a watch on that. And I'm also going to be talking about a lot on what should be the current way of looking at the market. So, there are people who have been uh, looking at the indicators. I'm going to cover those indicators, but in a very, very different fashion that you might have never thought possible. So that's how I'm going to be going to do that. So, okay, just give me 1 second. There is also a question right now from someone. 1 second. I'm okay. So you can see me here right now. There has been challenge with the platform today, given this thing, and I'm going to take that. My view on Bank Nifty and Reliance. Reliance is Reliance after all, right? I'm not shorting Reliance. I'm only looking for buying opportunity in that stock. Once I get a price confirmation on the upside, I will look for buying opportunity. So that's my view on Reliance, but from more positional perspective, not from short-term perspective. Bank Nifty again. I'll be publishing that in the Monday morning research report, the financial wave short-term update. So get Bank Nifty update from there. There is another question which has been popped up. If this is a wedge pattern from Nilesh, great to see you. In the wave context, is it an ending diagonal pattern? Yes, wedges are normally ending diagonal. It can be an ending diagonal. Right now, it's very difficult to say. Still ride it on the upside, but if the support breaks, change the stand. Be very quick in doing that. Should we add insurance sector for the short term? See, for insurance, I don't have much of the price data. I'm not betting on insurance. It can go. I'm not too sure. You can do your own homework. How do you get your book? Please visit trivedikyal.com and you will be able to get the book from trivedikyal.com. So you can do that. Any chance last ABC corrective into neutral triangle, Aditya? I think you have done. You are a new wave practitioner. Fantastic, Aditya. Exactly, that's what I'm looking at. ABC is possibly neutral triangle. We might have a D, but we'll let the C get over. So that is very, very important. So let C get over, and then we will see how it goes from there on. And do follow me on the Twitter at the rate Kailashish. So if you have questions with respect to that on the Twitter, and exactly, I'm excited on the YouTube. We are touching nearly 10,000 levels, subscribers, not levels. Okay, on the YouTube. So do keep sharing and subscribing on the YouTube at the rate Kailashish, and do check that bell button so that you get alerts for every events that I go live on. Do that. And before we move on, I'll take a very short poll right now, and this polling is going to be about whether you would like to join the BMW program, which is starting from next Saturday. If you are, here is the poll in front of you. I'll also launch a form. I think my colleague will share across the form, if they can, please. That will help to fill up the details if for anyone and everyone who would like to understand. So meanwhile, I also take the question. So please fill in the polling, and for people who are there on YouTube, where is the form? Can please someone share the form with me? Okay, here is the form. I'll just check, and perfect. So I'll just share across this form link, which you can possibly just give me a second. Okay, on the YouTube, I think it's there on the YouTube. Are you able to get? Book is not in Hindi, to be very honest. It's in English, so we might get it into Hindi translated someday. But as of now, no, it's in English only. Okay, on the YouTube, I've shared the form. So if you are interested in the Master of Technical Analysis, Master of Waves program, the Become Market Wizard program, you can simply fill in that form for now. Okay, and let me just stop the polling. I am assuming everyone has participated in this polling. I'm ending the poll right now. Uh, okay, perfect. I'll take one or two more questions and then we'll wind up. Are you betting on energy sector for 2021? Sanjay, no, I'm not betting on energy sector. If you are talking purely from Reliance, Reliance is no longer only an energy play. I think Reliance is shifting, diversifying big time from energy into the all the other segments because Reliance is probably trying to see something after 2 years, 3 years, 5 years, energy is going to be lost. Okay, looking at what happened with oil in this year, I'm not saying it was because of only pandemic. Something is not right. So I'm not betting on energy sector for sure. Okay, I'm not doing that. And Reliance is not an energy play. FYI. Okay, that's how we are going to be looking at. And I'll take the one last final question, which is there. Fourth wave started, or it will, how far can it be? 23% minimum. So this is not fourth. I'm looking from the more neo wave perspective. For me, this is like a double diametric kind of a pattern, or triple diametric pattern possibly, or a triple corrective pattern. We completed X, suppose that we might be forming a neutral triangle, that remains a possible, or we might forming an expanding triangle. An expanding triangle is a very tricky pattern where it breaks all the highs, breaks the AC trend line, and then it sharply reverses down. So expanding triangle creates a huge euphoria with the price to earning ratio that we are seeing right now, and then it reverses. So short term bet on the long side, medium term I'm not too bullish. That's what going to talk about. For the targets, if many are asking me for the targets, I'm not giving you targets. This market has no targets. You just have to wait for markets to resolve now. And if this is expanding triangle, and if we are in a wedge pattern in the last phase of this expanding triangle, we know what to expect next. So that's what I'm looking at, one day at a time. And let's see how it goes from here on. And I'm going to see you tomorrow. Okay. So here is, I'm not sure if there is a poll which my team created. Here is tomorrow there is a program on how to trade using candlestick, 2 hours of webinar, how to trade using candlestick and Bollinger Bands. Would you like to attend? You can simply say yes over here. And if you would like to attend that, and if you are there on the YouTube, possibly you can go and fill in the form. I'll share across the form, which is wavestudy.com/webinar. If you would like to attend that program tomorrow, you can simply go here and fill in that form and attend that program on the webinar. So here it is to every one of you. Okay, and you can join me there. Perfect. Thank you very much, and great to see each one of you. I am sure, Nilesh, I mean, you are following me everywhere. So, but that's what learning is, right? Thank you very much for following me, and I hope every time you learn something new. That's why we have started this Ashish Kyal Trading Gurukul platform, to ensure each one of you are learning something new every now and then. And we are talking about the market. So let's see how it goes, one step at a time. And let's just keep a watch on the sectors that we talked about, and let's see how they perform from here on from the medium term perspective. Thank you very much. Have a wonderful day, and stay tuned. See you tomorrow. Do like on Twitter and YouTube channel. Thank you.